Usually the cyclical low for gold is established in August. So that's another month out. And then September, the old adage, sell in May and come back after Labor Day. That's usually about the third week of September. So I would guess, from historic precedent, we would see probably all four metals move in a trading range from here, probably for a couple months at a minimum. Obviously, something could hit. But most of the news that's favorable to the metals is already kind of put into the price. And I know everyone's thinking there's very little resistance for silver from, 39 up. But hit 39 briefly, and now it's dropped off about $1, he said. So that's it. Sideways is what I expect. Doesn't mean the bull market's over. It's really healthy for markets to consolidate and build another base and move up.
Gold tends to weaken through July and early August, then begins a more sustained recovery from mid-August into September and beyond. As of early August 2025, gold is trading in a tight range, showing limited directional bias. With Trump's tariff deadline looming and no strong catalysts yet, analysts recommend short-term sell-on-rise strategies rather than fresh accumulation. Gold remains in its summer consolidation phase, trading sideways in a narrow band from the earlier rally, with prices hovering around $3,500. However, silver briefly touched $39, but it quickly pulled back. This sideways movement is normal and healthy. It allows the market to consolidate and build a base before the next upward move. The bull market isn't over. The speaker, David Morgan, is a well-known precious metals analyst, highlights that August trading is starting with a bit of panic. President Donald Trump's administration has unveiled a range of new tariffs set to take effect in 1 week on most U.S. trading partners. Nearly 70 countries face Trump's import duties, which were initially scheduled to take effect on August 1st. However, most were delayed at the last minute and will now come into force on August 7th. Trump sees the tariffs as an economic tool of power that will put U.S. exporters in a stronger position by keeping out imports and encouraging domestic manufacturing. While the situation remains dynamic, different levies will be imposed on countries, ranging from 15% on Japan and the European Union to 39% on Switzerland. Brazil is facing tariffs of 50% on its goods. Gold is consolidating within a stable summer range, absorbing gains from earlier in the year. With central bank demand easing and trade optimism rising, bullish and bearish forces are balanced. This sideways movement is typical and healthy for a long-term bull market. Gold tends to hold or gain value when equities and real estate decline, offering portfolio stability. In the second quarter of 2025, gold investment demand surged 78% year-over-year, with record ETF inflows and rising bar and coin purchases. Gallup now ranks gold as America's second favorite long-term investment. With growing debt, inflation, and geopolitical risks, gold could still reach $4,000 by 2026. As the video starts, don't forget to hit the bell icon and subscribe to stay updated. We value your opinion, so please leave a comment and give us a thumbs up if you enjoyed this article.
Well, as we both know, the tariff situation is like playing 21 at Las Vegas. You could keep rolling the dice over and over and coming up with a different number. But on the basis of what you asked me, yeah, I think there's a little more stability, a little more reconciling what these tariffs are really going to look like, and a little more solidity to the proposition that, here's what we're going to do. And you can kind of like depend on that. So, yeah, I think markets hate instability. They hate the unknown. So even though tariffs might not be suitable to the counterparty that has to pay them, once they are established and consistent and they know what they're going to be for some, time frame, then the market can kind of, take that in and work with it. Yeah, I think we're at again, that trading range. And that's what I call an indecision pattern. It's kind of equal bulls and equal bears. No one's really winning. The the bears win and the market goes down $100. The bulls win and it goes up $100. I'm referring to gold. And that means that just what I said. So what's going to take it to 4,000? Well, the bulls have to win. There has to be more buying pressure than selling pressure. What would cause that? Well, there's a number of things, but most are out there already. You know, the war situation, Middle East, Ukraine hasn't gone away, flare-ups in Pakistan that have cooled off. So all of those things that are really favorable to an increase in gold prices are already there and pretty well known. So what's going to take it to the next level? And that would probably be something in the financial sphere where we have, let's say another bond auction and no one shows up, as an example, where, yields are actually forced higher because demand is nothing. So to sweeten the deal, prices, their yield gets pushed higher. And that's just an idea. I'm not saying that's going to happen. I'm just giving you an example. But I am still of the mindset that it will get there, but maybe not as easily as we went from the 2,000 level, which we finally broke through and hit, 3,500 pretty quickly. I think we're going to need to kind of work this base and then go higher. $500 more is a nice move, but nothing like the $1,500 that we saw from the 2,000 level. Eventually, I think we're going to see even higher than 4,000, but I'm writing a report right now, and depending on the overall global economic climate and what happens in the, I would say, non-reality, the stock market indexes. There's a gentleman that most of our viewers would probably be familiar with, Charles Nenner. And Nenner is very, very bold in his predictions, but he's also very accurate. And for an example, if we went from the high level of the Dow right now down to 5,000, for an example, thought experiment. David, it's never going to happen. I'm not that bold. I don't know the future. And gold made it to 5,000. Well, that would be a very interesting place to contemplate because many in our peer group talk about the gold to Dow ratio. And when the gold to Dow ratio hits 1, that's a pretty good sign that we've hit a top in the gold market, or conversely, a bottom of the stock market. I'm not saying that's going to happen. What I'm trying to convey, and I want to convey very strongly, is that the price of gold is what most everyone focuses on. But really, you want the value of gold. And this is something that Mike Maloney does very well. He talks about how much of a house do you get for an ounce of gold, how many barrels of oil, how many bushels of wheat, how much of the Dow Jones Industrial Average. And so if you thought about, let's say, a contraction in the economy and the housing prices came down nationwide, we just use the U.S. for an example, let's say 1/3, but gold went up by that $2,000 or $1,500 from 3,500 to 5,000. So you got that increase in gold and you got a decrease in the housing market, or maybe the bond market, or the stock market, or the automobile market, which is suffering badly.
David Morgan argues we are in a significant transition driven by a breakdown of trust in global currencies. Trust in central banks is waning, with the IMF warning that political interference could trigger inflation and financial instability. Trump's aggressive trade policies and attacks on the Fed have further politicized monetary policy. As global tensions rise and systems like SWIFT are weaponized, countries are reducing reliance on the U.S. dollar. Gold is being embraced as a neutral, stable store of value. Central banks, especially those in non-Western nations, set a record for gold purchases in 2023. BRICS and others are shifting to trade in local currencies, signaling a move toward a multipolar monetary system. As the world becomes more digital, central banks are investigating, and in several cases, already launching or testing their digital versions of paper money, known as central bank digital currencies, CBDCs. About 94% of central banks are engaged in some form of work on CBDCs, according to a 2024 Bank for International Settlement survey. CBDCs could conceivably replace paper currency, but it's unlikely. David warns that the more control central banks have over money, the more control they have over people. On the other hand, more individual freedom with money leads to greater overall liberty. In general, a widespread rollout is unlikely anytime soon, according to BIS, as there are numerous technical challenges to overcome, and central banks considering CBDCs may require authorization from their legislative bodies to issue them. Plus, central banks will look to coordinate international policies and standards for CBDCs. Now let's redirect our attention towards the interview.
Well, I agree. I think it's a transition. I mean, it comes down to trust. I used the word faith a minute ago. I mean, people rather than having faith in God have faith in a currency, and the currency is a false faith. We know that. Faith in gold and silver isn't really anything more than something that people have trusted for thousands of years, and it can't be inflated away. So I think that's a transition where we all get back on the same page and say, okay, look, here's the problem. We couldn't trust our government to keep a currency stable. We can trust a gold coin is going to always be a gold coin of this weight. And today I value it for that much of a house or that much of bushels of wheat or whatever it be. And that brings us back to kind of a universal platform of understanding true value. And from that, we could go into, a betterment across the board in society at large, because, I've said it before. I don't know if it's a direct quote and I thought it up or not, but I've said when you can lie about money, you can lie about anything, because money touches every society, every nation state, whether they're using rupees or yuan or dollars or pesos. Everyone worries about their money, and they worry about it as far as, they're making enough of it. And if they have a lot of it, they worry about, are they going to lose it, or who's the real friends? Because they're so rich, they don't really know if they're getting interaction from people that really want to be with them or with their money. That's kind of sad in all those things. So I think getting back to basics is really important. I still look at the precious metals, as I said a moment ago, as being probably a transition to the next system. And the next system, in my view, doesn't have to be, a digital-based track, trace, and tax system that's being outlined for us constantly. It could be one much, much better than that. Holding, precious metals, something I've advocated since before I began on the internet. But it's part of your portfolio. In other words, that's my specialty. That's what I advocate, and I'll give you the reasons why. But really, if we want to benefit, that paradox of, a win-win situation where your investments are helping you to have a better lifestyle, and at the same time, what you invested in is also helping society with a better lifestyle, or cleaner air, better water, better food, easier way of doing things, better communications, whatever it is. That's the paradox. You can, as a true capitalist, you can benefit yourself and society at large. And that's largely what I want to be on. I want to be on that where we're helping each other with, our, let's say, wise choices with what we invest in. However, when you get in a distorted situation like we've been in for many decades now, and really it happened before August 15th, 1971, when Nixon closed the gold window, because we were lying before then. And that's why he closed the gold window. We said the dollar's as good as gold, but it hadn't been for a long time. Basically got caught and said, I got to stop that contract. I'm closing the gold window, as we refer to it. So the point is, we've got to come back to those basics. And you're right, there will be a time. Now, from my perspective right now, I think we're still going toward a system that's being pushed or propagandized, if that's a word, into a system of more control, not less. And the more freedom the people have with their money, the more freedom we have overall. And the more control the bankers have of the money, the more control they have overall. So I think we're at a nexus where there's a lot of people like you that have dedicated your life since, I think, age 16. I've done it most of my life to get the ideology out that, there is a direct correlation between free market economics and freedom versus some other system that really controls the system. And so we are at a very interesting point in history, but I'm just going to circle back and say you're correct. There will be a new one. And it's not necessarily the one that we have been taught about, and I've talked about, the CBDCs or a private version of the CBDC. I think that is the push. I think that's what they want. I've talked about it. I've been consistent about it. But I also hopefully have said it enough that just because that's what they want does not mean that's what's going to take place.
The market's pause to process previous gains while preparing for the next possible step upward is reflected in gold's current consolidation phase. The larger fundamentals remain bullish, notwithstanding the short-term uncertainties brought on by central bank actions, tariff announcements, and geopolitical concerns. Substantial central bank accumulation, growing investor interest, and growing mistrust of fiat currencies all point to gold's growing status as a haven. Although caution and a sell-on-rise approach may be advisable in the short term, the long-term trajectory of approximately $4,000 remains conceivable, particularly in light of inflation, global realignment, and waning trust in conventional assets. What potential effects might the introduction of CBDCs have on investor perceptions of gold and other hard assets? Could Trump's tariff policy increase global financial instability, thereby increasing demand for gold? Please share your ideas in the comments box below. We'd love to hear them. Don't forget to subscribe for more videos and give this one a thumbs up if you found it helpful. Thank you for joining us on our voyage.